Hey everybody, Jim Malone here, coming to you live from Dallas trading floor. Well, oh goodness, let's see if we can get this. Let me see if we can get this right here. Hold on. Goodness gracious. Let's see. Oh, it's not letting me do the effects. I'm gonna have to. Oh well. Such is life. Such is life. I'm trying to make this. Yeah, there we go. See if I can get this done correct here. Hold on. There we go. All righty. There we go. All right. That works much better. So it is Monday, and the market is being a little bit, shall we say, difficult. The Apple has been selling off, and Tesla. I got knocked out of Tesla today. It pulled back. I had a pretty tight stop on it. I had about 2%, but it blew past the 4-day line, so it looks like it's going lower, and we may have to wait for it to come back. Hopefully not too long, but it looks like it's pulling back, and it may pull back some more. So basically what's happening right now is that the Qs, the QQQs, are falling, but it's not a market retreat yet, because we still have some of the other things. So kind of want to show you the basically how the market looks right now. And basically the S&P 500 is down and the Qs are down, but the Dow Jones is up. So there you go. We are pulling back towards the 40-day line. I do believe we may be seeing a rotation. So I've been kind of trying to move out of some of my more tech stocks into more cyclicals. I do have a bull put spread on Cleveland Cliffs for earnings, and then I also have one that I'm going to show you a little bit later for Square, but that's a little bit different. I'm looking to pick up some shares in some of the mining companies, because it does look like copper has moved higher. There's an interesting company. Actually, it's in the IBD 50 called Southern Copper. It's actually a copper company that is in Mexico. It's doing quite well. It's number 13 on the list. And very interesting, because I do believe we are rotating out of some of the more tech names, maybe into some other names that aren't quite as well known. And, it's something that we're probably going to have to deal with. So be very, very careful when it comes to initiating new positions. Here's one thing I kind of want to show you, and this is part of the reason for part of my concern, and that is this is the margin debt. As you can see, this is a very interesting indicator, and it shows basically when we are likely to see a potential reversal. As you can see, the margin debt has gone way up in 2020. So this is a concern, and because of that, we may be nearing a market top, and we may have a correction. We're not there yet, but we may have a correction. As you can see, 2019, 2018, all the way back, really to 2009. That's when we had the big fall off. Remember 2007, 2009. Well, you probably weren't trading then, but that's when we had the big sell off. So this is a concern, and it does pretend that we may have essentially some change in the market, and so I'm trying to get ready for that. I'm totally off of margin, and seeing if there's going to be a correction, because I do think that we may be seeing that. Just wanted to show you an interesting trade that I just put out for everybody on Action Trade Alerts, and of course it's super easy to get on Action Trade Alerts. All you have to do is go to www.Dallas Trading Floor and sign up for the Action Trade Alerts. But you just go to www.Dallas Trading Floor. But anyways, this is a bull put spread on Square before the earnings, and the earnings are coming up tomorrow after the bell. So here's kind of what I did today on this. Basically, Square is making some new highs, but it's pulled off a little bit, and it does look very strong. It's got a 97 composite rating. Now the volume's up on it, and it's trading currently at 276.32 when this slide was made. The question is, how can we benefit from this as it comes in? Now, typically after earnings, even if there's tremendous earnings, typically you will see a little bit of a fall off on the price. And I put that into this particular bull put spread. Here's how it works. Basically, you buy 255, 255 puts for the 26th of February. That's coming right up. And you sell simultaneously 260 puts. So the total of this is 450. That goes right into your account. And then, as you can see, as long as this closes, this closes by the 26th above 259.50, we should be in the money. As you can see, this is the expected return. So as we go forward, we can kind of see what's going to happen. Earnings are going to be tomorrow on the 23rd. So hopefully we will see that either go up or go down. But by the end of the week, hopefully we'll be above 259.50. If that's the case, we keep all the $450 as long as it's above 261. So that kind of gives you an idea of the trade. And by the way, this is all available on the Action Trade Alerts, of course, but you got to sign up for those at www.Dallas Trading Floor. So I'm kind of going to give you an idea of what I'm in currently. I just got pushed out of 5.9, which is a position I had opened up, and I thought I was doing pretty good on it, but the market, it moved a little bit against me. So basically, this is currently what I have. As you can see, there's no Tesla in there. I just have the GBTC. That's off pretty strongly today. I do think it'll come back. Cleveland Cliffs, that's another call spread that I have. Rent-A-Center, that's a position that I entered today. It's doing quite well. This is sort of a counter-cyclical stock. It does pretty well in recessions, so that can be sometimes a good thing. And of course, I had just showed you the bull put spread that I've just done, that I've just entered into for Square. So that's kind of the long and the short of it. So without further ado, let's get to the questions. Let's see. All right, so we get the first question here. What's the charts? All right. And thanks for waiting, everybody. Appreciate it. Let's see. The first question from Alex today is, let's look at XONE and DDD. Let's look at XONE first to kind of see what's going on there. XONE. All right, and that's X1, and they make 3D printing machines. It's pulling back from a climax top. Let's take a look at it. All right, so kind of trying to move in a little bit on let's move in a little bit on representation here. Hopefully we'll get, there we go. All right, so basically what's happening here is we had this climax top that we had this climax top, as you can see, and then basically it broke and it broke down, and so it's coming all the way down. Now the question is, where will it find support? Well, it's got a relative strength of 98, so that's quite good. It seems to have bounced off the 21-day line, so that might be an area of support. But right now, in this kind of environment, I think it's got to be you got to be a little bit careful with this. Let's take a look at some of the, kind of do a spell chest on this one. It's got a 77 checklist, so that's pretty good. That's pretty good. Let's look at the fund ownership. It's definitely increasing, so that's good too. And it's got excellent industry rank. Here's the thing on this one. I would be a little bit leery on this one because it does look like it may be getting support right about this line. But I don't really think you want to buy this unless it moves above the 10-day line, and that's basically right here. So here's my take on that. I wouldn't probably be a buyer on this one unless I was above. Let's see. Can I give an exact price on this? Oh, goodness. All right. Well. So I wouldn't be a buyer on this one probably right now. I would wait until it moved above the 10-day line. Let's see if we can get that. Let's see if I can give you an exact number on that 10-day line there. Basically right here. So about 50.53 is where the 10-day line is. So I would watch this one and wait for it to move. Wait for it to move. 50, 30. So that's where I would be more interested in it. And the reason is because I don't think you want to buy this one. Oops, there we go. I don't think you want to buy this one unless it gets above this line right here. The 10-day line. So right now it's making progress, but I would watch this one right now. I would watch this. It did have a climax top. It looks like it's gonna start moving on this trend line here, but I want to see it move above that 10-day line to make sure that we're in the right place. It's going the right direction, but it's not confirmed. So you should definitely be a little bit careful on it. Wait until it moves above the 10-day line at about 50, 53. So let's see if get the next question. And see also for DDD. So let's see if we can get that as well. There we go. DDD. "3D systems." Oh, okay, so you're very much into this. It's essentially a similar pattern. That's very interesting. Similar pattern to the other stock that you brought forward. It's essentially the same kind of pattern. We had this climax top, and then we've pulled back, and this one looks like it's going to probably find support at the 21-day line as opposed to the 10-day line. Let's look at this here. All right. So this is the stronger of the two. Oh, heck. This is definitely the stronger of the two here, and this looks like it's getting some support at the 21-day line. It's also got a very strong relative strength at 99. So that is indeed very good. So let's look at a few other things on here. Make sure the checklist isn't quite as strong, but it's still acceptable at 66%. The fund ownership, quite good, 273, liking that. Let's look at the sector. Yeah, excellent. 15 out of 197. So that's very, very strong. So basically, out of the two, I think you got to go with this one, DDD. But here's the thing. It's still pulling back, as you can see. It's still pulling down. We need to see it make a bounce off of the 21-day line. Now, the 21-day line is right at, let's get it exactly. Yeah, there we go. Okay. So the 21-day line is basically at 41.42. So basically what you want to do on this one as well is you want to, wait until it goes over. Make sure that's exactly right. 41.60. So anyways, wait until I got it screwed up on that one. Wait until the stock goes over 41.42. So that's going to be the way. But DDD is the best of the breed there on that one. So DDD is better than the other one, but they're both quite good, and it's a good space. 3D printing has definitely come on as of late, and so it's got some very good characteristics. Let's take a look to see Anybody on TikTok here? Let's go to the top here for questions from TikTok. Wow, we got a lot of people looking today on TikTok. Thank you. One of the things that you're going to have to get used to is I think we're going into a correction. So many of the stocks that may have worked very well, may have worked very well, like Tesla, may not be. And this is a question: should I sell my Tesla? Yes, you should sell your Tesla. That's what I would do right now, and that's what I did this morning because we're going to have to wait on it, I'm afraid. So. Definite sell signal. So that's I want to be clear about that. Let's see. Well, maybe it'll let me do it. Maybe it'll let me edit it. So I think you're going to have to sell your Tesla right now. That's a good question. I sold mine today. I basically was out as Tesla moved, to about just 760. I do think we may be pulling back all the way to 600. There will be another time that we can buy it, but for right now, I'm afraid, we got to get out of Dodge. It's not setting up well. So I'm gonna show you the chart for Tesla. TSLA, of course, is the symbol on it. I'm going to go to the daily chart, and this is significant. This is a significant sell signal for Tesla. I want to. I don't know if you can see this. Let's see if we can zoom in a little bit. Yeah. Went over to the wrong chart. That's why. There we go. Now we have a good chart for Tesla. So I'm going to move over there a little bit and kind of show you what's going on here. As you can see, we've fallen through this key support, and this is the key support here, the 40-day line. Now, normally, this is an excellent place to buy it. Now, I was trying to buy it here when it bounced, but it's moved decisively below that. So, right now we're in a situation where, we're in a situation where we're going to have to. This is basically a sell signal with what's going on. So it's time to close your positions in Tesla right now. It's all the way down at 720. It's basically lost its support. I'm totally out of Tesla. It's probably a good time for you to be too, just because, we're at 730. You see, I sold basically to this morning up here, and then as it's fallen down. So Tesla may go as low as 600. Okay. Tesla may go as low as 600. That seems to be where it's getting support. So right now it's a bad time to be in Tesla. It's also a bad time to be in Apple. That's why we're going to see possibly a correction in the market. And that's one of the reasons why we need to reposition ourselves. I'm about 3/4 in cash right now with no margin. So that's something that you should consider yourself. This is Apple. It's a little bit less severe, but it's falling nevertheless. This is one of my alerts. It went off. I didn't have any Apple, but this is falling too. So the overall NASDEQ is falling, but more importantly, what they call the QQQ is falling. So let's look at the QQQ, and that is the NASDEQ 100. I want to show you this chart. This is a key chart, kind of what's for going forward. So we don't want to be, we want to be super careful right now getting into anything. This is the QQQ here, and you can see we've fallen below the key level of the 21-day line right here, and then we're headed towards the 40-day line. If this punctures the 40-day line, see, and it hasn't done it since back here in November of last year. Okay, so this is this is when we started to see, this was when we had this big pullback. We had a big pullback in October and November of last year. Then we started to go up, and then we pulled back again. So this is significant. It hasn't touched, the QQQ hasn't touched the 40-day. It's not there yet, but there was a violation here. This is when we had the flash downturn, and I think we may be going there too. So this week is probably going to be a big pullback week, and we ought to be very careful. I think there's a few little things we can squeeze in, but I do think that we are potentially moving lower. So right now, sell your Tesla. That's what I would recommend. So let me take a look at, okay. So I had made 150% off of Zillow. It dropped now at $500. Should I sell? Absolutely, you should. Because remember, this market is changing. And so let's look at Zillow. But it's time to fold your tents, folks, because we are seeing, at least you got to be real careful this week. We're seeing a little bit of a pullback in the market. Now, this is a normal thing, so don't get overly excited. But if you're up 150% in Zillow, I think it's time to possibly consider selling at least part of your gain, possibly all of it, because I do think that is, we're starting to see signs in the market. That's the thing. So here we go. Thanks, Will. SYF. Interesting. Okay, let's look at SYF here, Will. Yeah, let's look at it. SYF. Let's see. Okay, Synchrony Financial. Actually, they're doing well. That's not surprising because this is probably a good time for companies like that. Also, look at Ally Financial. That's another one. That's old GMAC. That's looking pretty good. 76. It's a little bit low. I typically like to go higher than that. Now, here's one that I just bought. I want to kind of show you. It's called Rent-A-Center, RCII, and this one does particularly well when the economy is in decline, and it's up strongly today, as you can see. It had this little breakout here. I bought this on the breakout, and by that way, the way I do that is with a buy stop limit order. So as it moved above, that's where I was buying. I was buying at about 51 here, and it moved right nicely above this little mini. This is called a pocket pivot, little mini pocket pivot. So some of the financials are doing very, very well. Synchrony Financial, possibly is one of them. You got in at 36. So let me take a look at Synchrony again. SYF. Got in at 36. Okay, that's not bad. Here's what I would do, but I would set a stop loss. I would definitely set a stop loss, basically at the 10-day line. I think you want to put, you could put it a little bit lower. I think you want to set a stop loss at the 21-day exponential, and that is 37.13. So a little bit higher than where you're going. So here, Will, what I would do is I would set that stop loss at about 37. Let's see if it pulls up above that. It looks like it might, but you don't want to be wrong on this one because this could pull back significantly. We just don't know. So if you're willing to take a little bit of risk, put about a 2.5% stop loss on it. Or if you're willing to take no risk, put in a 37.13 stop loss, and you'll be right at the 21-day line. And that's probably where it will bounce, if it does. But I do think it's going up. I think it's a good buy. Let's take a look at Apple. Now, Apple's been pulling back, as has Tesla. So there's a lot of stress on the QQQ, which is the NASDEQ 100. Let's take a look kind of at this. It's at 126.28 right now. Definitely trying, it's been trying to make this handle, just trying, but it's fallen below. You know what? I think it's time to give this one a rest. It may do well in the near future, but for right now, I think we got to be a little bit cautious about it. So here's the thing with here's the thing with this. I just think that you need to watch this one. Watch this. And if you are down more than 7% sell. And that's kind of what you got to do on this one. Just because I do believe that it's getting a little bit weaker. It's got a relative strength of 63, which isn't bad, but I like to see an 80. It's still got a good checklist, 77%. And of course, everybody and their brother owns it. Now, here's the thing about Apple, and I don't know if if you could even believe this. This actually may be setting up for a short. This is as strange as that sounds. Here's why I say that. This is the right shoulder here. We do have a topping, and then it's followed below the 40-day line. Now, the real key one, of course, is this 200-day line. We're not anywhere near that yet. But if this thing rallies, this spring probably will rally 2 or 3 times at the 50-day line. If it does, if it rallies twice on weak volume, then it's potentially a short. Right now, it's a watch list for a short, if you can believe it. It's still doing really, really well, though. So, but if you're down 7% on this one, I think that you might want to consider selling it. It doesn't look good in terms of where it has never since the split, the 4-for-1 split, it just hasn't ever really gotten back. I mean, it rallied a little bit here, but then it pulled back. So I do think that with Apple, you don't want to be in big Apple positions. If you have a lot of profit, that's great, but consider taking some off, because it doesn't look like it doesn't look like it's gonna. It looks like it's not gonna rally. So that's it. Let's look at MXL real quick here. MXL. There we go. Hey, back to linear. You know what? I did try to buy this one. I did try to buy this one on the, but I had a buy stop limit order on this one. This is a good one, by the way. They just signed a deal apparently with Twitter, not Twitter, excuse me, with Facebook. So that's probably what's doing this. Tremendous volume here. This is a relatively thin one, but this is quite good. Now, here's the thing. You really kind of want to buy it within about 5% of this 38.71. So let's just kind of take a look to see if I can do that real quick. I'm just going to kind of pull my calculator over here to see kind of where we could possibly buy this one. So the buy point on this one would be 38.71 times 1.05. So basically what I'm doing here is I'm showing, so you could buy that's buyable up to 40.60. So that's buyable up to 40.65, but no higher. So you could possibly buy this one still. It's a little bit extended, but not much. It's a good stock, by the way. It's a good stock. Here's the thing: you should always try to stay within about 5% of the most recent high. Now we're on a daily chart here, so this is what they call a pocket pivot. It does look like it's lined up well. You've got the 50, the 21-day, and the 10. They're all correctly lined up, with the small going small to going small to large, 10, 25, 50, 200. So that's very good. So that's showing very good strength. Now, I wouldn't buy it more than up to about 40.65. So we are just over that. So that's the buy range there. Maybe it'll dip a little bit, but you could still buy it. It's a little extended. Good stock though, and really thanks for that. Thanks for that. That's a great one. Thank you for bringing that up. That's a good one. I tried to buy that as well. I tried to buy it with a buy stop limit order. My buy stop limit order was at 39, and I didn't renew it yesterday. Unfortunately, I got busy doing other things, but that's how I typically like to buy them, as they're moving higher with a buy stop limit order. And that's kind of what I did there. All right, so let's take a look for people on TikTok to see if we've got any questions that I can answer. Can you please show your screen when talking about the stocks? Here's the thing you got to do to take a look at my screen. You've got to go over to YouTube, because I can't show my screen on TikTok. It's just an issue with TikTok. Here's what you got to do. Just go to get to the screen. It's super easy. All you do is you just go to my profile, hit the link, and it'll take you to the thing called beacons, and then you can just hit on the YouTube, and it'll be showing you exactly what's on my screen. So I'm sorry that this is a technical difficulty with TikTok. I'm not able to show my screen, but I can show it on TikTok. Can show it on YouTube, and I am simulcasting on YouTube. So thanks for that question. That's a great question. And I'm sorry that I can't do that yet. Hopefully, they're going to improve that, and we're going to be able to see that. Okay, what's your opinion on the stock market crash? Well, I do think we're coming into a correction, and I do think it is relatively imminent. Here's why I think that we're starting to see the key movers like Tesla and Apple break down, and we're also seeing margin debt going up to record highs, and that indicates a top typically. So we've got to get ready to deal with that. It hasn't been called yet. The market is not in correction yet, but it's getting close to that, I believe. I'm 75% in cash, and I'm doing primarily spreads right now. So, so that's kind of the thing. We've got to kind of brace for it, because we're likely to see a correction. We may or may not, but we're likely to see one. All right, thank you. Let's look at Riot Blockchain, and that's close. It's RIOT. RIOT. There we go. Riot Blockchain. Yeah, this is a classic. By the way, this is a classic. Climax top, as you can see how it moves way up. Let's plug in there, and let's move in a little. Oops. Move in a little bit there on the. There we go. There. Okay. So now we can see it a little bit better. This is what's been happening, of course. Moved way up, and this is in sympathy, of course, to Bitcoin. And by the way, the GBTC is also pulling back as well. After hours, we're up a little bit, so it just is kind of all over the place. But it seems to be finding a floor right here. Here's the thing. Let me just take a quick look at GBTC to see kind of what's going on there. Okay, the GBTC has pulled back up again. Yeah, see, it pulled back. It touched the 10-day, and then it went back up. So I'm glad I didn't sell. But yeah, we definitely had an interesting period here. Here's the thing about Riot Blockchain. I think you got to be kind of a little bit careful due to the fact that it does have this climax top, and we may be in a situation where let's kind of take a look to see. Okay, yeah, we did have a big sell signal here. We've had some selling. So overall, let's look at the weekly chart, because that's really going to tell the tale. Yeah. Okay. So here's the thing. It's interesting. The daily chart looks much more orderly than the weekly, but we do have some selling going on. If you're in this right now, remainder full, and you have profits, you might want to consider taking some of them, because I do think this is looking like it's going to go lower, based on my chart. We do have a downward pointing. As you can see, there's a little downward pointing on the RS line. That indicates that there's a potential when we open tomorrow. It is going to be opening tomorrow a little bit lower, or it may just pull down a little bit. But this is definitely a climax top, and you want to take when you have profits in these climax tops, you want to take them, because they don't come along all that often. But this is something that you want to consider taking your profit in. So that is my opinion of Riot Blockchain. All right. So next question. AMC, buy more, hold. Sell. I wouldn't. I don't know. I realize that there's a lot of people on Wall Street Bets that have loved this stock, and it's doing okay after hours. I mean, it really is. But here's the thing with the climax top, and this is a classic climax top. As you can see, it moved way up to 20, and now it's down at 6. But it's pulled above the 200-day line, so that's good. And there's been a lot of buying, so somebody out there likes it. You know what? I wouldn't. If you've got profit in this one, hold it. But I probably wouldn't buy more at this point. I probably wouldn't buy it more at this point. It just, it's got a checklist of 33. It's got declining fund ownership. Wall Street Bets likes it. Let's look at the short interest. We might be making money. We might be able to make some money because of the short interest. So I'm going to take a look at the short interest. Oh my goodness, I can see why people are interested in this one. Yeah, we have 76% short interest in this one. Well, what that means, folks, is that most people, 3 out of 4 people that are in this stock right now are short. So if this thing, and I can see why the Wall Street Bets guy wants to push this up, because if this thing can be pushed up enough, there will be a short squeeze like you read about. So here's the thing. Get ready for the short squeeze. Here's what I would do on this one to make potential money on this one. If this thing moves above about $10, if it moves above about here, about $10, then you want to buy more, because it's probably going to go higher because there's going to be a short squeeze. And I'm basing this on the amount of short interest. There's 76% short interest on this. So right now, there is enough what they call overhead supply. As you can see, that this volume has been going down, but it has spiked. So right now, there's enough overhead supply. So right now, it seems to be in balance with the price. But if there is enough people that are caught short on this that have to cover, then we could have a situation like GameStop. And of course, but that would only really occur, that would occur probably above $15. It may be above $10, but probably above $15. But if this thing moves above $10, then I think you want to start getting interested in it and buying more. Right now, no, you don't want to buy more right now because there's not enough for short squeeze. If it goes up to $10 though, then there may be a serious issue with the short squeeze, and it may go up a lot. But right now, I don't think you want to increase, Robert, your holdings. But if it does go above about $10, I think that we may see a short squeeze, just like we did on GameStop. Now, the question is whether that can happen or not. I don't know, but I'm going to write that down in my book. I'm going to put short squeeze. Oops, short squeeze. And I'll put this out on the action trailer. So if I have short squeeze on AMC above about $10 a share. So I'm really not interested until it gets about to 10. When it gets to about 10, then I might be very interested in it because of the short squeeze. If the short squeeze happens, the way you handle that is you just put your stop losses in, you just move them right up, and then eventually it gets up here, and then boom, it just falls back down to earth. So that may be something that is going to happen on AMC. I wouldn't be increasing my position though right now. Thoughts on car parts? I think this is PRTS is the symbol. I do like these kind of stocks, like car parts, because typically in a recession, and I think we are coming into a recession, stocks like car parts do well because people have to fix their cars and they're not buying new. So let's just kind of look here. There we go. Kind of zoom in. I finally figured out how to do that. For the longest time, I couldn't get it right. Earnings at 14 cents. So that's a little bit of a concern. Looks like it may have bounced off of the 21-day exponential. So that's this green line here, by the way. But we have a very nice, we're still at that price. We're still a little bit above. We're still a little extended on this. The buy point, of course, is 17.29, and that is on a a cup base. So it seems like it's forming a handle. It's time to watch this thing. And here's the thing, and this is kind of, I should make a technique on this one, but here's what you need to do. You know, eventually this thing will reverse higher, and I do think it looks very good. It's got a 96 relative strength, but you don't buy it until it reverses higher, because you say, Jim, how do you do that? Well, what you do is you set a buy stop limit order, and then each day you ratchet it down, and eventually it will turn. And as it turns, you'll buy it. So right now, you know, so that's how I would buy this one. I do think it's worthwhile getting into it, because it's got a good checklist, 77. It's got good fund ownership, 201, and the industry is terrible at 186. But one thing I do know is that companies that sell car parts in recessions do extremely well, and that's sort of where we're at. You can only look at O'Reilly Auto Parts to see that. So here's what I would do. I would wait on this one a little bit, and then as it moves higher, using a buy stop limit order, I'm going to put buy stop limit on car parts. PRTS is the symbol. All right, so that's how I would handle that. I still think it's good. No, don't buy it now. Don't buy it yet. Wait a little bit until it gives us an opening by doing a reversal. And one of the best reversals, of course, is off of the 40-day line. We're way above that, but it does have this buy point of 1729 right now. So that's what it's telling me. Okay. All right. Next question is CCIV. Let's look at CCIV. And okay, this is a blank check company. Here's the thing about these blank check companies. I would recommend staying away. The market is changing away from, in the summer, there was a lot of exuberance, and it was very easy to make money with blank check companies. That is not going to be the case going forward. We are changing, and here's why I know this. The Tesla is way off, and so is Apple. These are bellwether stocks. So you don't probably want to be looking to buy anything related to a blank check company. And Churchill Capital is a blank check company. So Esther, I would recommend, as hard as this is, and this is the hardest thing investing, it's waiting. I think we got to wait. And I don't think this one is where you want to be. I don't think there people do make money on blank check companies. I'm not saying that they don't. But I think on this case, we want to be really super careful, because this does not, because of the way the market is, I don't think I think it might be not a good time for this kind of investment. So consider waiting. Let's look at the SQQQ. Now, typically the way you use the SQQQ, this is a good question, because when you're hedging against the QQQ, which is the NASDEQ 100, this is the alternative to it. Now, I want to show you the chart on this one. Right now, it is a downward trending chart. We wouldn't necessarily buy this one. Now, remember, this is a very special ETF. It moves against the QQQ, so it's very, very different. So everything is sort of upside down on this chart. But I want to show you the daily on this one. Let's kind of zoom in to see kind of what's happening with this. And we'll kind of move in there a little bit. And okay, so hopefully we're going to get some information. We're just starting to see a little bit of an upward trend. We have broken through the 21-day. Okay, that's a good sign, and we do have volume going up here. Here's where I would buy the SQQQ. I wouldn't buy it right now. I would buy it only if it moves above this level here, the 40-day moving average. That's where I would buy it. It's not time to buy it yet. But let me give you an there we go. Okay, so let me give you a place that you could possibly buy that. Let's zoom in one more so I can get a good I can get a good price on that. Okay, so about $15 is where we want to buy it. So here's how here's how we could possibly do this. We would basically, what we do is we set a buy stop limit order for $15 plus 10 cents, or 15.10, and this is for the SQQQ. There we go. So here's how I would be buying this particular. I wouldn't buy the SQQQ right now because I just think it's a little bit too early. But I do think we're seeing a market direction change. Where we want to buy the SQQQ is right at this level here, this red line. Okay, because as it's moving higher, there we go. As it's moving higher, we want to make sure that it punches through this green line. That's the 21-day line, and then it moves above this red line. If it does, then we're probably going to see a change in direction for the SQQQ. Now, that red line currently is at about $15. So where we want to buy this is at $15 plus 10 cents, or 15.10. So the way to do it is to set a buy stop limit order for $15 plus 10 cents. By the way, if you need to find out what a buy stop limit order and how to do it, I have put this out on the out on my website on YouTube, and it's super easy to find this. All you have to do to find the buy stop limit order is go and please subscribe to my YouTube channel. It's youtube.com/DellusTradingFloor, and then just type in a search on buy stop limit, and I have a little 3-minute, I have a 1-minute video and a 3-minute video on how to do a buy stop limit order. So that can be really good. And by the way, while you're there, subscribe to our free action trade alerts, and that's on the website at Dallas Trading Floor. And by the way, if you're looking on TikTok and you want to see kind of the charts and everything I'm doing, it's super easy. All you have to do is go to my profile, hit the link, and you'll be taken directly to a little page, and you will see the live version going on right now. And also it's going to be up on YouTube in about 30 minutes. So that's a good way to see some of the stuff that's going on. And by the way, when you're there, please like us on YouTube. Why are you talking so slowly? Okay. The reason I'm doing that is that you need to go. I can't show my screen on TikTok. You have to go over to YouTube for that. YouTube.com/DallasTradingFloor, and you'll see the live that we're broadcasting right now with the screens and everything. So, hopefully, okay. All right. Let's see. Love your. Where's she? Okay, I can only share my screen on TikTok. I can't share it on YouTube. Sorry about that. I mean, I can't share it on TikTok, only on YouTube. So I apologize for that. All right. Let's see. Okay. Next question is apps. Okay, this is Digital Turbine, of course. And let's apps, APPS. Oh, all right. Okay, we are pulled back a little bit on apps. Thanks, Matthew, for this. Let's just see. It looks as if we're bouncing right off the. It looks like we are bouncing off the 21-day line at 76.16. Okay, and we do have a downward trending arrow, so not a good time necessarily right now. We're after hours, anyways. We have a good checklist though, 7 out of 9. That's good. Let's look at the 390 funds in it. So that's very, very good. And we've seen a little bit. It's moved up a little bit. So it does look like it's probably going to get a bounce. Well, I don't know. There's not that much volume there. So it probably is going to bounce at this line here. Here's the thing. I would be a little bit careful. Wait for it to reverse, and then I think once it reverses, you might have a good buy. It's looking pretty good, so I definitely like that one. So there we go. All right. Okay. Open. Okay. Double down on FCX at 37.96. Which is a similar. Yeah. Okay. Thanks, Byron. This is kind of a good play, I think. FCX is kind of a counter-cyclical stock. Freeport McMoran, I think that's not a bad idea. Actually, I think that's kind of a good play. That's sort of what I probably would have done too. I do think this is a strong stock because it's in the mining area, and mining is getting a lot of love. There's another one out there called Southern Copper that I really like as well, but this one is good. And also, the Australian company, BHP, is also very good. The miners are going to do very well. I think this is a good move on your part there, Byron. This is a good company. It's got a good checklist, 7 out of 9. Excellent ownership. It's going up, by the way. And the industry is very good. It's 9. See, this is another thing, too. We know that we're moving into a period in which you're going to see more action in the mining stocks because their industry rank is moving up. Whereas in the summer, automobiles were number 1. They've fallen a little bit, and miners have picked up. So that's the kind of, the infrastructure stocks are definitely, and the cyclicals are the ones we want to be looking at right now. And definitely FCX is in there. They're the biggest American copper producer. So good. I think doubling down on this is not a bad idea at all. Just make sure you keep your stop losses. But I think you may have a winner with Freeport McMoran FCX. I think that's a pretty good stock, and that's right. Okay, let's look, Kylie. Let's look at Exxon Mobil. That's the king daddy of them all. Probably one of the oldest stocks in existence. It's moved up nicely today. By the way, we're going to see some higher oil prices. We're going to see some higher gasoline prices. That's a definite. Devon Resources is one I also want to point your attention to as well. But that's looking very, very strong. This is a monster stock. It's this is about as anti-growth stock as you can get, but it still has its chops. It's still not a high enough relative strength for me, but remember, it was down in the dumps last year. So it's got a 55 checklist. The ownership is, people still own it. 68. This is a dividend king. This is kind of like Exxon Mobil in a lot of ways is kind of like Altria. I don't know if you've ever heard of that, but remember that used to be called Philip Morris, and it was a cigarette stock, and it was one of the most powerful dividend stocks out there. And I think that's kind of the situation with Exxon Mobil. The last buy point was 64.09, and we're now at 79. So this is looking good. I mean, it's this is going to be a relatively slow mover, but very nice. Very nice. I probably wouldn't be in Exxon Mobil. I think there's some better ones. I want to kind of point you to possibly Devon Resources. Let's see. I think I can't remember the. Okay, No, I'm sorry. The XOP. Excuse me. Yeah, I think you're good to go with the. I put on the XOP. I should put XOM. Excuse me. Golly, Exxon Mobil. It's essentially the same chart. We kind of show you that as well. There we go. Exxon Mobil, the king of the dividend stocks. There we go. Move in on a little bit. It's up a little. It's up 1 cent after hours. This is a pretty slow moving stock, but just very nice. After the lows that it made basically in November of 2020, and then it's just been ever since up. And I think this is staying above the 10-day line, which is very good. Unfortunately, the last time to buy it was when it pulled below the 24-day at 44.29. We may get another opportunity. It's a little bit extended right now, not that much. It'd have to be 10 cents. It's almost a little bit extended here. Good stock. Absolute. Absolute dividend machine. 55 is a little bit low for me in terms of the in terms of the checklist. Still, just a tremendous number of funds in it. Low industry because the price of oil was so low, but that's changing. Let's look at some competitors here that we can get that may be a little bit that may be a little bit better. Let's see if we can get EQ. Let me look at NFE here really quick. Yeah. Okay. Yeah. All right. Yeah. NFE. This is one I think you might want to consider as opposed to Exxon Mobil. It's called NFE, and basically what it is it's basically a gas company, and they're just doing great. And it's a $17 stock. It's got a 92 relative strength, and this is something that you might want to put in your pipe because it's got an 88 checklist. The ownership is improving. The industry is still the same as Exxon, but I think it's going to outproduce. They've got some very nice earnings. They're just very well positioned all the way around. No real great place to buy it, unfortunately. Really, the only way you could buy it is as it moves above about 18, which, it's 17.69. I definitely think you could buy it as it moves above about 18. But all in all, a very good stock if you want to be in the oil and gas sector. And I do think that this is a good time to start putting oil and gas companies on the list. And the reason I do is because we are moving from a more growth-oriented, as the interest rates go up, and that's happening, that's going to disincentivize growth stock investments, companies that don't have earnings. It's going to incentivize companies that have earnings. Oil and gas companies typically have earnings. This one, for instance, this EQT company, it's got a cash flow of $4.92 per share, and it's $17. Now, normally, you're not looking to buy low PE ratio stocks because that says that they may have been yesterday. But oil and gas is so beaten down that it takes things like what happened down here in last week in Texas to realize how valuable oil and gas is. So this is essentially, I'm not a value investor, but this is a value play, and I definitely think it's well worth looking at. And I'm definitely trying to orient my stocks more to mining, infrastructure, and oil and gas, because I do think that we're going to see a little bit of a movement towards that in the near future, just because of the fact that many of the tech stocks have gotten so extended. So let's take another question. Oh, that's Exxon Mobil. Okay. NMDM. Let's look at NND. Yep. NNDM. All right. Nano Dimensions. Okay, this is interesting. I saw this company. Don't know a lot about this company at all. Definitely a tech company in Israel. 99 relative strength. Very nice. It's got a 66. It's got a 66 checklist. That's my minimum. It's a relatively thin stock, but it does have 14 funds in it. It seems to be doing well after hours. Let's look at the industry. 47 out of 197. So that's pretty good. Let's see if there's any options. No, yeah, there is. There's actually some options on it. This is interesting. Okay, here's what I would say about this one. Let's look at the monthly chart to kind of look at the whole history of this. It's been around since 2006, so that's good. It's come down, but it's pulled back down to 12. Here's the thing. It really probably is best bought if it's bought over $18, and we're a little bit away from that at $12.45. So here's what I would do on this one. I would probably wait. Wait to see if this makes a new high. Right now, I think you got to watch this one, just because it's just because of the way it is. So I think the best thing to do right now is watch list and not buy this one. So that's kind of what I'm thinking with Nano Dimensions. It looks good, but I'm still not totally convinced on Nano Dimensions. All right. NEO. NEO has been pulling back as of late, as we all know. But let's see how it looks. Let's look in today. Haven't looked at it in a few days, NEO, but let's first look at the weekly. Yeah. Oh goodness, it's more competition, and I don't know. So kind of zooming in a little bit on there. Okay, let's look at it. Yeah, it's pulled below the 40-day line. This is a concern. Okay, here's the thing on this. It's still showing some very nice support right here. It's showing support. Track the price there. But I think we got to watch this. I think it's just not viable right now. If it hits the 21, if it hits the 200-day line, then I think we can be assured that it may bounce. But right now it's not a good time. So you need to watch this NEO. I think NEO is not going to be the stock that it was. So that's my thoughts on NEO. Well, I've run a whole hour here, and I'm going to be back tomorrow at 2:30. Till then, if you want to get on the Action Trailer, it's super easy to do. All you have to do is go to www.Dallas Trading Floor and fill out the little form. And of course, it's all free. And of course, if you would like to subscribe to the YouTube channel, very easy to do. It's youtube.com/Dallas Trading Floor. So until tomorrow at 2:30, happy trading.